Good evening, a very warm welcome to Business at 9 here on ET Now. I'm Vikram Oza with the big buzzing business news of the day. And up front, we tackle the new proposals by SEBI, the markets regulator, proposing to raise the minimum subscription for SME IPOs to 2 lakh from what was 1 lakh. And now these changes are for the allocation methodology for non-institutional investors, the NIIs in SME IPOs. Let's find out what the proposals entail from my colleague Anurag Joshi. He's joining us on the phone line. Anurag, if you can walk us through the SEBI proposals and what exactly they are hinting towards in terms of course, more protection for investors, but what is the scope of the proposals?
Markets regulator Securities and Exchange Board of India has raised the bar for retail investors to participate in initial public offerings of SMEs. Now, this follows a flurry of interest that we have seen in some of the recent SME IPOs, especially from the retail investors who are looking to book quick gains out of these equity sales. SEBI's concern in the recent past has also been to curb such a flurry to prevent any kind of a systemic risk from spreading. Now, according to the SEBI circular, the SEBI has proposed to raise the minimum subscription for SME IPOs to 2 lakhs from 1 lakhs. And SEBI has said that the minimum allottees in SME public issue may be raised to 200. And they've now proposed to make changes to the allocation methodology for non-institutional investors in the SME IPOs. And they're restricting the offer for sale component in the SME IPOs to 20% of the issue size. There'll be tighter monitoring of the use of funds for those issues which are more than 20 crores. And another key conditions that SEBI has made is that only those SMEs which have an operating profit of 3 crores for at least 2 of the 3 preceding financial years will be eligible for an SME IPO. That's preceding the application.
Anurag, thanks for walking us through the proposals. Let's get an expert perspective from Sandeep Parekh, Managing Partner at FinSec Law Advisors. Mr. Parekh, welcome to the show. You tell us up front, do you think these proposals are going to discourage retail investors, reduce market participation, or do you think it's going to attract more serious, more informed investors?
Right. So I think the idea is to restrict investors into this market. I think it's somewhat of a reactive stance of SEBI that, I think the market's too frothy. There's kind of a lot of related party transactions. If you see the proposal, it talks about, lots of problems with the SME listing really, and how companies are run, poorer governance, more related party transactions, etc. So I think they want to increase the standards, number one. Number two, they want to change the composition of investors in 2 ways. One is putting a minimum number of 200, so kind of a larger acceptance, and also the ticket size increasing, doubling from 1 lakh to 2 lakhs. So I think I think they recognize that it's a very frothy market, and maybe people have gotten too excited about issues which probably don't deserve the kind of attention they have gotten over the past 3 years. So I think this is some sort of tamping down into this SME market.
So, Mr. Parekh, do you think this tighter fund monitoring can actually effectively mitigate the risk of misuse of IPO proceeds, safeguard investor interest? Because that's exactly what you're saying SEBI is hoping for. Can that be effective, though?
So monitoring can certainly be effective. I think for more than 20 crores or 50 crores, some number is there, and that monitoring will become mandatory. But again, I think the problem has 2 parts, right? One is that, there is some kind of, let's say, over smart conduct by the companies. But the other side of the problem is that, valuations are kind of not consistent with reality today, especially last 2.5 years. So, even for honest companies, I think, companies should have a particular price and not be 5x that price. So I think SEBI is addressing both issues really. One is the quality of the company and the governance standards, which is where the monitoring comes in, and the second part is kind of making the investors more thoughtful before they kind of just think there's some free money which is available here.
By increasing the minimum allottees in these SME public issues to 200, do you think that's going to promote broader investor inclusion, or do you think it could lead to compliance challenges for issuers?
So it's the idea is that it needs broader acceptance from the market before it's successful. So if they got 180 investors, it'll be considered to be a failed issue and they'll have to return the money. So essentially, they're saying that you'll have to convince more people that this is a good company. 4 times more people should agree that this is worth investing in. So the idea is that just having some family and friends support it and getting 50 people is not going to be good enough.
But also, does it mean that IPOs are going to prioritize fresh fundraising for growth rather than enabling promoter exits? And by doing so, they may increase investor confidence. Is that likely to happen?
Again, like I said, it's reactive, so it's too early to say what
Probably.
the impact would be. But
Sure.
yes, I think the idea is to kind of tamp it down in multiple ways. One is qualitative, the other is kind of the kind of investors who will invest in this. So let's see. I mean, it's too early to say. Anyway, as we're seeing, a lot of froth is coming out of the market, especially from the small caps, mid caps. So
Yes.
Markets have a habit of correcting itself well before the regulator steps in.
Right. So that's why the question, like, did we need this? Also, they're restricting the offer for sale, the OFS component, to 20% of the issue size. You think that could disincentivize high growth SMEs with promoter heavy shareholding from going public? Is that going to stop happening too? Because there will be a downside to it as well, right?
Yeah. Well, there will be. Again, I think the idea is to tamp it down. So it's by design. I don't think it's an error. It's they want to kind of reduce the froth. So they want few people to come into this market, and But again, it's kind of not an ideal way of addressing froth. Um, but yeah, this is the proposal. It's still not the law, of course. Still at a very early stage. After this, it goes through public consultation. People give the feedback, and then it kind of it may go to the board in the next 2-3 months or longer.
Are we also kind of restricting the diversity in our investor base with these proposals, you think? Because now with these proposed changes in the allocation methodology, for one, for non-institutional investors, for NIIs, it could lead to a concentration of allotments among the larger investors and perhaps reduce that diversity that we have in the investor base. You think that also could be a fallout?
It could be. It may not be, because they're also asking for a larger number of investors. So I guess in a way the two balance each other out. But having said that, yes, I think there will be some impact on the kind of investors who are coming into these IPOs.
About increased compliance costs for SMEs. Perhaps, some smaller companies, they may not pursue IPOs
Yep.
because the compliance costs go up.
Yeah, I mean, that's the idea, I guess. They don't want everybody to kind of jump in. We had a company which had like 10, 15 employees and 2 workshops, and they got some massive oversubscriptions. I think really SEBI doesn't want every random person to come to the IPO market merely because they're attractive today. So it seems to be the design and not kind of waste product of the regulation.
But isn't there a risk of over-regulation in a segment that already faces challenges when it comes to raising capital? What happens to these SMEs then? Of course, you talk about froth, but some of the genuine ones don't get access to capital which they need.
So I think before this entire SME market came up, really, this segment really relied on private equity, venture capital, and those kind of private markets. And I think a lot of that will go back to that, really. And I think that's in my view, it's not such a bad thing. It's not that they're going to be starved of capital, but they'll have scrutiny of more sophisticated people. So it's doesn't seem to be it is reactive. It will create consequences, as you rightly said, in terms of ability of a lot of companies to raise capital. If I were to take a longer term view, it doesn't seem to be such a bad thing, really, in terms of moving that market. You're not killing the market; you're just moving it to the private VCP market.
But then, as far as global standards go, global benchmarks go, how does India's SME IPO framework really compare? Are there lessons to be learned from countries that have thriving SME markets?
No, so SME markets have never really thrived too much, except in over frothy times, really, frankly. So you have the pink sheets in the US, you have the alternate market in the UK. So none of them are very successful because they're not. The signaling effect is quite weak in terms of showing good corporate governance, abiding by because the standards are relaxed, right? So your disclosure standards are relaxed, your governance standards are relaxed, your RPT standards are relaxed. So the signaling value is kind of hugely diluted. So they're globally not very successful in terms of scaling up. India has been an exception, but again, from a longer term, how many of these survive? We'll of course see after 5-7 years. But as of today, many haven't in fact managed to transition from the SME board to the main board. So I think that's the good news with this, that it has actually managed to incubate some of the smaller companies and enabled them to scale up.
Sure. So much of it, of course, moving pieces. And like you said, these are proposals, and we'll have to see what exactly this takes shape by way of rules. But it may impact post-listing liquidity, price discovery when it comes to SME stocks, and whether or not it eventually discourages retail investors and reduce market participation, attract more serious, informed investors. All of that is up in the air. We will keep monitoring the space and keep circling back to you, Sandeep Parekh, to get in more perspective. But thanks very much for joining us tonight
Thank you.
with your perspective on this. Let's